Joining us now to talk tech and the markets, John Belton, Gabelli Funds Growth Equities Portfolio Manager. John, great to have you with us.
Good to be with you.
So we've been through earnings season, and things have largely gone fine. So now what? I mean, what is the next sort of catalyst? What is the next sort of landmine that could face this trade?
Well, I think things have gone a little bit better than fine this earnings season. I think this has been one of the best earnings seasons I can remember. I think earnings growth for the S&P 500 up something like high 20s on an underlying basis, better than expected. And I think for tech, it's been kind of a similar story. Some of the best earnings we've seen in a few years, at least.
Is there any concern as we continue to talk about interest rates in the Fed and sort of a higher interest rate environment simply because of the uncertainty surrounding the Fed's reaction function, how the Fed, that there needs to be embedded more of a risk premium into bonds? How does that impact how you view your portfolio in terms of funding costs and things like that?
Yeah, I do think higher rates is clearly a headwind for stocks. So that's something I'm thinking of. But, at the end of the day, stocks are going to be driven by fundamentals and stocks are going to be driven by earnings growth. And I do take comfort in at least the fact that fundamentals right now are very strong, both at the company specific level and at the macroeconomic level. I think we have a U.S. economy where consumption is very strong, investment is very strong, and some of the shorter cycle end markets are starting to show signs of recovery. So I think we have a strengthening economy. So I guess the question on higher rates is, are rates going higher for the right reasons? And I think there are some signs that, yes, that is the case.
In terms of which stock has come out the best out of earnings season, I mean, what was there sort of a report that you're like, oh, that satisfies my question, that
right.
Alleviates my concern?
Well, I think there's been this debate for tech stocks and specifically on the AI sector, on all this CapEx. Is it generating returns? And I think this earnings season, it felt like an inflection point where the mega cap tech management teams are debating this CapEx, debating the ROIC argument, and showing that these are businesses that are accelerating at scale. And some of the disclosures we heard, so Amazon talking about getting a payback on CapEx less than 3 years. SpaceX talking about getting a payback on AI CapEx less than 1 year. So I think we're clearly seeing clear evidence that this CapEx is good CapEx. It's generating returns. It's driving acceleration in these businesses. And these stocks are not really priced for that. So I think the mega cap, to answer your question, the mega cap group, I think, comes out of these earnings looking really strong.
I think the last time I spoke to you on Closing Bell Overtime, it was before Microsoft's report, as I recall. And Microsoft had a very strong report and sort of satisfied all of the overhang that investors had going into the report. Has that cleared the decks for a move higher for not just Microsoft, but the software group? Because we have seen IGV lift off.
Yeah, I think the software group, the next trade to me, so the last trade has been the infrastructure software companies' stocks have been trading higher and the application software stocks have been trading lower. I think from here, within that application software group, there should be more stock picking opportunities. There should be, more defining. There's going to be winners and losers within that bucket. I think what Microsoft showed in this latest quarter is they are one of these companies where they're starting to monetize AI on that application software side. They're starting to get usage-based revenues flowing through, and they're talking about M365 commercial cloud revenue accelerating through this year. I think that was one of the most positive things they said in this earnings report.